Hey, what's happening, guys? Dan Darrow here with another Options to Play video update. So it's the moment you've all been waiting for, the first earnings on the radar video for the new earnings season, right? I hope you're as excited as I am. Today was a really great start. Wasn't a whole ton of names scheduled, but the banks have been moving. Disney was an event, one of the bigger events this week that wasn't earnings, right? And that's been having a crazy day. So a lot of action, and I hope that that really continues into the new week because it's only going to pick up from here. I mean, the next month is just going to be steadily, increasingly busy with like the amount of names just picking up really dramatically the next 1 to 2 weeks. All right. So let's kick things off here. Before the open on Monday, you have City. So this is priced in 2.7 points, so give or take, and Goldman. This is about nine bucks. I'm gonna lump these two together, even though like the setups are a little bit different. You can see there's little differences there, but um, both pretty nice days on Friday because of the J.P. Morgan report. Um, so I'm guessing probably decent numbers on Monday, right? I mean that's what probably most people are expecting after the JP numbers. The only issue now though is then you're kind of wondering what's priced in, right? You know that they both jump on upbeat numbers from JP, then you're wondering, well, if everybody's expecting good news, is there still going to be a move on top of it? So not going to be doing anything with either of those particularly. The XLF straddle still open, so if they want to continue, that's great. All right, XLF still in the process of working out. Breaking out could have another 50, 60 cents just to hit the top of resistance here. Right, so still some room on that one, but I'm not going to do anything with Citi or Goldman individually. Also, Afria. This is kind of like an under the radar cannabis play. So this is also Monday morning pricing about a point. It's like $1. Um, I feel like it's got some nice potential. Like a really nice tightening pennant here, right? Earnings, maybe not a huge catalyst, but it doesn't need to be a huge catalyst because the chart is basically at a resolution point, right? Like the pennant has really gotten to like the narrowest point of the range, and a small move could really have some dramatic impact on the overall chart. So I felt like a volatility strategy here. Interesting bet. Thought there could be $1.75, $2.50 either way out of this type of pattern. Whereas again, like the straddle's only priced in like $1. So I thought that was kind of an interesting one for Monday. After the close Monday, there's only one name that's kind of interesting, depending on which way you want to look at it, JB Hunt. But I've personally never really had much success with this one, and it's not a consistent mover, so I'm going to leave it alone. It did move quite a bit back in January, though. But overall, I mean, the further back you go, I mean, it's just not really like a ton of interest there on my part. So, on to the next, right? Tuesday before the open, more financials. So you have Bank of America, which looks great, right? So again, don't really know what's. I mean, especially after Citi and Goldman, then even less. You're wondering what is left in the tank for Bank of America by the time they report on Tuesday. But that's pricing in about $1.10 as of right now. BlackRock, so the largest asset manager, looks pretty good, right? Just busted through some overhead resistance. It's through its 200-day as well. That's priced in about 14 points. I feel like that may be a little bit better setup actually, but it's not always a consistent mover when it comes to earnings, and spreads are a little bit wider, options a little bit thinner. So, if you want to look at it, maybe it's speculative, bullish bet, see if it continues higher into like this kind of air pocket. But options are a little bit tougher on that one. Also, J&J, it's priced in at about 4 points. Like this one is as a bearish play. So it's coming off a quarter where they cut guidance. So back here, and it's really rolled over, lost a ton of momentum the last couple weeks into this, hanging right at the bottom of key resistance. Another weak quarter, weak print, and a gap down. It's probably going to set up a pretty nice breakdown, and there's plenty of room lower. So thinking some sort of spread. Because options are pricing at 4, which is a little bit on the high side. But I do think that there could be potential down to like the 130, even like the 128 range. So that's what I'm looking at on J&J. UNH, It's priced in at 10.5 points, and I have absolutely no idea what to expect with this. These managed care names have just been completely destroyed the last couple days, and it's on concerns over the future Medicare landscape. And as the presidential election gets closer, the rhetoric starts to heat up around free Medicare, so on and so forth, blah blah blah. But these things have just gotten absolutely destroyed, and the chart looks particularly bearish on UNH. The problem is that the numbers have been really solid the last few quarters. So, a lot of like mixed signals here. And 10.5 points, I mean, it's moved more than that the last 2 days. But I honestly don't even know which way I would go. And is it going to have a materially larger move than 10.5 points? It's kind of hard to say. So I've traded this one in the past on earnings, but this quarter I feel like I might it might be smarter just to be on the sidelines, wait and see what they say, wait and see what the stock does, and then maybe go for a trade after the report. I just really don't know what to do with it, especially after the last couple days here. Tuesday after the close, IBM. So this one looks really good. So it's priced in at 7 points, coming off a solid quarter here. Stock has been in a really nice, strong uptrend. Closed the gap from October. I feel like people are starting to get back on board IBM a little bit. I mean, the number wasn't a blowout last quarter, but it was solid. They got the Red Hat deal, right? That might get people a little bit more interested. It's just I feel like it's starting to rebound. The valuation's still like really, really, really low. If they can put together another decent quarter, I mean, it seems like there's room at least into like the mid 150s, right? Just up into this October pivot. The much bigger area above it, though, is 160, which might, require a little bit more. But that's what I'm thinking. Maybe like longer dated call, right, or longer dated call spread. Something to be able to kind of like ride. It's, if it has like a similar move where like a gap and then to grind, right? Something to be able to ride it for a little while, especially if it can like get up into the 150s, because then it looks like they might have a path to 160. So something longer dated, I would think, on IBM. Also, after the close on Tuesday, the big one everybody wants to know about, right? Netflix having a tough day today on the Disney streaming service debut. It's priced in at about 29 points, 29, 30 points for next week. And honestly, I mean, this thing's really done nothing for the last 2.5 months. And you know what that means in my book is it means that it's due, right? A stock like Netflix doesn't stay in a consolidation like this for too long. So it's been sideways for 2.5 months. Got earnings coming up. I feel like there's room probably to 400 above. Still has a gap that it hasn't filled. On the downside, you're probably looking at 320 into like the 300 area. There's a gap on the downside. So I feel like there's visibility for 40 points potentially either way on this thing, 40 to 50. It's priced in 29 to 30. I feel like the last 3 quarters. So last quarter it was kind of like a non-event, but it was also up 120 points directly into the print. The 3 quarters prior to that, it was averaging about 40 points though. So it's priced in 30-ish. The 3 quarters prior to this last quarter it was averaging about 40. So it seems like a volatility strategy here is an interesting idea. Right now, the open trade it's the long portion of the calendar call spread, but I think the plan is to adjust that and maybe tighten it up and look at position in both directions, just in case you get that 40 to 50 move either way. Just because it's such a tight consolidation, and it seems like it's due for a move one way or the other. Obviously, you're going to have to wait the numbers to see which way. Overall, though, I feel like this might be, if not the best, one of the best FAANG setups this quarter, just for movement alone. Okay, Wednesday, what do we have? ASML. So Wednesday before the open, ASML. This is a first look at the semi-suppliers. They're priced in at about 8.5 points. So this is going to have a pretty big read-through to other names. It is a long way off its December low, right? And it's actually within striking distance of its 52-week high. I mean, it's about 18 points, but still, I mean, it's a lot closer to its 52-week high than is its 52-week low. That's for sure. It's coming off a miss and a guide lower. You would never be able to tell. They missed and guided lower, and it's up, it's up what, 45% off its 52-week low. So it does seem though that there's more downside risk here than upside, especially at this level. LRCX, AMAT, these are two highly correlated names that should move with ASML. So I'm thinking sympathy trade with those guys, just because neither of them report next week, so the options aren't going to be priced with the catalyst, and that they should react to ASML's numbers. So sympathy trade, right? LRCX and AMAT. That's what I'm thinking on ASML. KSU also. So this is Wednesday as well. Probably not the first reel you look at, but it's actually one of the more interesting setups. It's priced in 4.5 points, and actually CSX reports the day before, and that's going to be like the first look at the rails. But the further back I go on KSU, you'll see why I feel like it's interesting. It's still not back far enough. Here we go. So you can see that I had a nice grind higher, and it's going to be reporting basically right underneath like this long-term resistance level. And you know, it's pricing in 4.5 points, and if positive, I mean, that's basically going to put it right at the top of this, and a pent-up move, you know, like compared to like CSX and UMP, right? NSC, like look at the charts of these, and look at the charts of KSU, right? So a pent-up breakout through 5-6 year resistance. This could have some serious power behind it. So CSX will report before this, but I actually think that KSU is a little bit more interesting. Actually, UMP is later in the week too, but this KSU chart up here, kind of interesting for like a speculative long, right? I wanted to highlight that one. Also, Pepsi. So actually a pretty decent action in some of these staples. So this is priced in about 2.5. You know, it's hanging just at the top of resistance, right? Moved 375 last quarter, 3 the quarter before that. So options seem a little bit underpriced at 2.5 points. So it might be a decent opportunity for a strangle or a straddle in that thing. You know, it might not be a huge mover, but it's averaged, you know, about 3.5 the last 2 quarters. Only priced it at 2.5. Something to take a look at. Wednesday after the close, Team. So software stock. Just really great performance, great numbers last quarter. It's priced in at 10.5 points though. And the problem that I see with this is what I saw with like Workday and Twilio is that it's just up so much into the numbers. Expectations are so high. Everybody's expecting a blowout. It's just, you know, I don't know if that there's going to have material upside on the actual print. And what worked on Twilio and Workday was waiting for kind of like a sell the news pullback to like scoop some for like a quick rebound, and I guess that's what I'm going to watch for Team. But that's priced in 10.5 points. Also Wednesday, LVS, priced in a little over 2.5. We caught this big breakout right here to the 200-day, right? And the stock is up a lot into these numbers. The issue with LVS is that they've actually missed 3 quarters in a row, so you have to be a little bit more cautious on this. If the call spread, if the current call spread that was rolled up is still open, probably would have to hedge it, right? Just because they've missed 3 quarters in a row. If the not a call spread, just a regular call, it's not a spread, excuse me. So the regular call would have to hedge it. But if the numbers are surprisingly good, or if they're like just good, you know, there does appear to be quite a bit of room for the upside still. So it's an interesting setup, but it's up a lot in a short period of time, and it has a history of missing the last 3 quarters. It's missed, so got to be a little bit more cautious with that. Also, Wednesday after the close, URI. This is priced at 9.5 points, and it's going to be the first look at the industrials. It's not the most interesting industrial of the week, but it's the first look. I don't love this name in general, and I feel like recently it's been struggling to really get the big moves on earnings. It used to, like a few years ago, be a really big mover. Recently, not as much. October was a bigger move. It's going to be interesting, though, because it's the first report. CAT occasionally moves off of this, so occasionally we'll react to it. Not always. I don't know if I'm going to do it. If I do, maybe look at something wide, like a wide strangle, just in case you get a move like October where it's like $20. You know, I don't know if it has that type of move in it, but just because it's the first industrial, it makes it interesting, and I like participating in like the first reports of each sector. So that's one I'm watching. I'm kind of undecided on it though. All right, on to Thursday. What do we have? Before the open, AXP. So this one's been lagging Visa and MasterCard pretty substantially. It's priced in at about 4.5 points for next week. And it seems like if it's good, there could be a pretty big pent up breakout, right? Like it's gonna have to get up through 115, which has been resistance a couple times. Um, it's not a consistent mover, and the numbers haven't really been that great on it recently, so it's a little bit more risky. But if it is good, like it could play some catch up, right? Which so you can see like Visa, really great performance recently. Mastercard, right, and then AXP has been lagging a bit, so something to keep an eye on. Honeywell. So this is one of the more interesting industrials next week. It's priced in at 4.25. Aerospace was definitely one of the bright spots in industrials last quarter, and Honeywell really has barely had a pullback since it reported. Um, Chart looks great, right? But the expectations are definitely higher after the last quarter, after the recent performance. URI is the first industrial, but Honeywell is probably going to have more of an impact on the overall sector just because it's a bigger name, a little bit more diverse, right? I feel like it's a decent setup for a strangle, right? Because it's had like a huge run, it's just under striking distance of its 52-week high. I'd probably be favoring the bull side, right? Probably just based off recent performance. UTX though could be a decent sympathy trade on this. Kind of been correlated names recently, and that doesn't report next week, so the options should be a little bit cheaper on that thing. So that could be a decent sympathy trade. Yeah, it's something to take a look at. Schlumberger also Thursday before the open. So this is priced in at about 170, 175 in that range. So coming off a solid quarter here, and stock is working on this breakout, which looks really, really interesting. Chart looks good. Oil's been strong. And now on Friday, you had some M&A in the sector, right, with Anadarko getting bought up by Chevron. So like the long side here, we're looking for that bullish breakout. Measured move, you're probably looking for something up into like the 49 to 50 range, all right? That's what I'm looking at on Schlumberger. Skechers, also Thursday. So this is a typically a pretty big mover when it reports. You can see that it's hanging just into like the gap from this April disaster last year. It's priced in at 4.5 points. Last quarter we played this. The options were on the lower side. I think they were like 3.5, 3.25. Now they're 4.5, so more expensive. It's. I mean, it seems like they're. I mean, it's such like an obvious gap above, and then there's a gap underneath now. So there's gaps all over the place. The stock has a history of moving. It seems like it's a little tougher setup this quarter, even though even though it's kind of in a more interesting area. The setup's a little tougher because the options are a little bit more expensive. But it is a very consistent mover, so maybe if you can get the risk down with like spreads, might be the better way to play Skechers. Also, another one on Thursday morning is Taiwan Semi. So this is priced in at 2.5 points, and this is going to be the first major chip stock and Apple supplier. So ASML earlier in the week, but Taiwan Semi is a big boy. So this is going to have a big impact on the sector, and it's really going to set the tone for the chip stock reports. I honestly don't trade this one very often, but you could watch Intel or Broadcom or even like the SMH or the SOX, right? Like it should react to that. It's one of the top weights in the semi ETF, so it's definitely going to have a pretty big impact. Probably won't trade it, but definitely going to watch it. Okay, Thursday after the close, ISRG. So it's priced in at 31 points. So here's the problem with Thursday after the close is that the markets are actually closed on Friday because of the Good Friday holiday. So ISRG reports Thursday after the bell, but you're not going to be able to trade it till Monday. So that's kind of frustrating. But stock has been on a nice grind higher into the report. Chart looks great, hanging out right above its 52-week high. Recent numbers have been strong, but expectations are also high because it's pretty good stock performance. The numbers have been great. They've consistently beat over the last couple of years. So high expectations. Strong recent performance. Seems like it might be 30 seems like it might struggle to do that. It's had some sell the news reactions to earnings in the last like year or so. So makes me a little bit more cautious up here, just because expectations are so one sided on this thing. I do like the chart, and maybe if it has a pullback between now and then, could give some opportunity. If it stays here, don't know if there's much to do with it, just because it's a little bit overheated. Expectations were high. It's almost like that team, right? So it's just had a really great performance. Expectations were high. Everybody's expecting to beat. Don't know how much upside there is. If you want to look at something maybe into like the 600 area, something like a little bit more manageable, like a 15 to 20 point move. All right, so that's that. Again, the markets are closed on Friday, so there's nothing Friday. But yeah, I mean, you can see it picks up. It goes from nothing to something really really fast when earnings season kicks off. So it's going to really start to pick up next week. So lots to look forward to. On a programming note, we got our option session is on Monday after the close. So definitely put that into your calendar. Hope you guys can stop by for that. It's great timing in the sense that earnings season just kicked off, so we can spend some more time going over catalyst trades, swing trades. Bring all the questions you have. If you want to just break down certain setups, we can do that. So it's nice timing for that. So I hope you guys can all make it. All right. So have a fantastic weekend, and I look forward to talking to you guys all on Monday. All right.